trying to get back to the basics of great products.
Power comes from sharing information.
I try to convince people to slow down.
Open.
This is the Soaked by Slush podcast.
Hi there. Before we go to the actual episode, here's a quick word from our sponsor for this episode, Hannes Snellman. Is there a common denominator behind Smartly.io's sale of a majority stake to Providence Equity Partners, SoftBank's acquisition and sale of its stakes in Supercell, and Telia's investment in Spotify? Yes, there is, and it's called Hannes Snellman, a Nordic law firm proud to carry the responsibility entrusted to it by these and other clients in pivotal tech-driven transactions. Regardless of the size of a project, Hannes Snellman's dedication and world-class combination of skills and experience remain the same. The firm advises leading and aspiring international and local corporations and investors across all business sectors. Hannes Snellman has the expertise and capacity to handle any demanding local or cross-border matters in which assets are being developed, protected, financed, acquired, or under dispute. Thank you. Let's go to the episode.
Hi everyone and welcome back to the Soaked by Slush podcast. My name is William von der Palen and with me in Copenhagen is Isak Rautio. Hi Isak.
Hi William, nice to see you again.
Nice to see you too, and nice to see you, John Lindfors. Welcome as our first guest for this newest season.
Thank you very much. It's a real pleasure to be here.
And we're, John, both from Helsinki. You've had a considerably more international career than at least me so far. So could you maybe, I'm sure quite many people know who you are, but just in case, could you set the scene, so to say?
Absolutely. So as you pointed out, I was born and bred in Helsinki, grew up there and actually spent the first 23 years of my life in Helsinki. And then as I was graduating from university, I was keen to find opportunities, keen to find international opportunities, and sort of by hook or crook, I managed to land a job in London at Goldman Sachs, the U.S. investment bank, and then I actually ended up staying there for 17 years, and for the last 10 years of that sort of 17-year period, I was very much focused on technology. So advising technology companies on financings, on M&A, working with some of my colleagues on the principal investing side to invest in different companies. So I had the joy and perhaps sometimes the pains associated with working with many of the first generation internet companies in 1999 and 2000. And I was actually working both in London and New York during my time at Goldman. So was sort of very much involved in that first wave of internet, which actually even 20 years later has been very, very helpful to sort of frame various things like, ultimate market potential, obviously the need for real traction with users, and the importance of capital, because obviously you saw this massive wall of capital basically be available for these first generation internet companies, grew very rapidly, but obviously the market, the user numbers weren't really there. But I think that it was very instructive. And then as that sort of dot-com bubble crashed, I ended up switching and focusing on working with many of the bigger tech companies in Europe. So Nokia in Finland, Ericsson in Sweden, SAP, Siemens, etc. And that lasted for a few years. And then sort of in 2005, 2006, many sort of entrepreneurs that had been involved in that first boom in 1999, 2000 started setting up perhaps their second or even third companies. And then the market sort of started picking a little bit up from there. And then in 2010, I had the opportunity to join Yuri Milner at DST Global, which was really sort of starting its journey as sort of an international growth equity focused investment house. I had known Yuri for several years before that. Goldman Sachs had invested in his prior business, Mail.ru, and we had worked on a number of different things. And actually, a few of my colleagues from Goldman had already joined him. So it was a very natural step. And obviously, after having been for 17 years in one place, it's with some trepidation that you start on something completely new. But obviously, in hindsight, it was absolutely the right view. And in the last 11 years at DST, we've basically been focused on the same thing, which is try to find the strongest founders targeting very significant markets and which are on a path to become market leaders or even just expand existing market leadership. So, and we do it completely globally. And as you pointed out, I've been based in Asia since 2011. I have an office both in Hong Kong and in Beijing. And normally when we don't have the unfortunate travel restrictions that we have today, I would be going back and forth between those two places very frequently. But it's been very, very interesting to sort of especially follow closely the emergence and massive growth of the internet market in China. And that's really sort of been my key focus over the last 10 years.
Exactly. Yeah. So you have it's fair to say you have a very, very interesting background, and these are the kind of topics we wanted to focus on today. So basically, technology, internet, platform economy, and a bit of COVID as well, obviously. You have a long perspective, as you just said. So maybe not looking back too far, because it becomes maybe almost too long a perspective in that sense. But if we look back maybe, say, 10 years or so, how much has the world changed, and how much has, the internet changed the world we live in, the smartphones, these kinds of technologies, and has that kind of your predictions that I've seen videos where you talked about internet and these kinds of trends already about 10 years ago, and you were correct in many instances when you predicted it was going to be big, and you had some charts showing how it's going to be exponential and all that. But has the pace still surprised you, or did you see it coming?
I think that it probably has surprised everyone, or most people. Even though we sort of live and breathe this industry 24/7, and I've been doing it for a long time. I think that what I do, and I think that what a lot of people do, is that you overestimate expected change in the near term, and you underestimate it in the long term. And if you think about long term, 10 years, I think, is a pretty long time. And I think that it has to do with compounding. If something grows by 30% a year, over 1 or 2 years, things don't change necessarily that much. But, if you compound something over 10 years, it obviously changes absolutely dramatically. And I think that it's this growth in the internet sector which has been compounding at a pretty fast rate for a long period of time. And I think that that's why, many of the predictions that I probably made 10 years ago or so have been on the conservative side. And actually, ahead of this podcast, I dug out some of my old notes. So I think that the first time when I was on stage at Slush was in November 2012 in the old cable factory, if I'm not mistaken. And I think that I made sort of 6 or 7 predictions where we would be in 2020. And the interesting thing is that some of them were sort of more or less in line. Others were underestimations when we sort of look at it. 9 years later, 8-9 years later. So I think that the prediction that I made back then about some of these, and I'm not going to go through all of them, but there were a few interesting points. I think that I predicted that there would be 5 billion internet users by 2020. I went back and checked this. That actually turned to be pretty much an accurate description, a little bit depending on the source that you use. I think that you get 5 billion, perhaps a little bit over, a little bit under, depending on the source. But I think that was sort of more or less in line. Then I also made an attempt at the prediction of connected devices. So not only mobile phones, but obviously now sort of in hindsight, cars, IoT, etc. And my prediction was 20 billion or more than 20 billion devices by 2020. That was a significant underestimation. There's more than 40 billion today. So I was sort of off by half when it came to interconnected or sort of internet connected devices. Then another prediction that I also made was online advertising spend. And the reason why online advertising spend is that obviously so many business models rely on advertising. They offer a free service and then they monetize through ads. So it's very, very sort of critical for the value in the sector. And obviously that's how Google monetizes more or less exclusively still today. I made the prediction that there was going to be 200 billion of advertising spend online in 2020. Last year it was 325. So again, a pretty significant underestimation. And then if you sort of go through other things like e-commerce spend, again, I was probably sort of probably 30 to 40% too conservative. I estimated 2.5 trillion. I think that is closer to 4 trillion today. But I think that where I was most off was the internet market cap, which at the time in 2012, November 2012, probably wasn't much more than a trillion, perhaps a little bit more than $1 trillion US. My prediction was that it was going to be 3 trillion by 2020, and it turned out to be 8. Now, obviously, we are sort of in a we have been in a more than 10-year bull market, and obviously many of these companies had actually received a huge boost as a result of their business models being accelerated by COVID. But I think that this is probably where I was sort of most off. Then there were a couple of other predictions that I made, which was the number of internet companies in the top 100 companies globally from just a market cap standpoint. I predicted 10 plus. There are 10. So that was sort of similar. So generally speaking, if you sort of try to sum it up, I was probably on many of the dollar related predictions off by a pretty significant margin. And I think that if you sort of think about many of the companies that had become really, really important over the last 10 years and sort of really emerged over the last 10 years, I think that in many cases, we didn't really know. I think that I would have been quite far off and mistaken if I had tried to sort of pinpoint specific sectors. I think that things just happened much more quickly than I expected over that 10-year period. So again, sort of underestimating change in the longer term, probably overestimating it in the short term.
Something that came up here that would be interesting to get your perspective on is you said that you lived and worked, as it were, through the .com bubble and that whole shebang. How should we think differently, if at all, about that time compared to now?
So I think that there were a number of sort of factors that created this enormous bubble back then. One was obviously the emergence of internet, and remember, all of this was basically desktop based at the time. there was no mobile internet whatsoever. There weren't really any sort of mobile devices that were connected or not connected in sort of any practical way from a daily perspective. So it was all desktop. Then few people talk about it anymore, but there was this almost hysteria about Y2K, about a lot of old mainframe computers having only been programmed to take into account 2 annual digits. So and not 4. So going from 1999 to 2000 was going to wreak havoc on the whole digital world at the time, and there was an enormous amount of money spent to sort of develop software and to do all kinds of redundancy plans. So there was just a lot of capital going into the overall software and technology sector, and then again we had been in 2000 we had been in a 9-year bull market. There was a short recession in 1991 in the US. I think that obviously it was a little bit more severe in Finland. But again, we were sort of at the tail end of a 9-year bull run. So I think that it was sort of a combination of all of these that added fuel to the flame that sort of then caused this enormous explosion in market value of many of these stocks. But the fact of the matter is that there was very, very little monetization. And companies were raising enormous amount of capital with literally PowerPoint business plans, very few users, and even if they had some users, those users weren't generating any revenues. And obviously, today it's a very, very different situation where all of the big companies in the sector, the top 10 companies that are part of the top 100 that I just referred to. Obviously, all of them are very significantly profitable, have, depending a little bit on the model, very significant margins. Even above 50% EBIT margins. So I think that there's just several orders of magnitude change in the amount of revenues and the amount of profits. And of course, still today we talk a lot about sort of just expectations fueling values, but it was just much different back then. And obviously, I would say that just in terms of number of companies, I would expect that out of the public companies, or sort of trying to estimate back, out of the public companies at the time, I bet you that 90% went belly up. So even if they managed to go public, and by the way, the activity was really just in the US, some in Europe, but really in the US mostly. I think that probably 90% of them were bought out or just went out of business. But of course, there are companies that are still very important that went public during that period, including eBay, including Amazon, including Yahoo, and obviously really sort of the company that has done the best out of all of those hundreds, if not thousands of companies that went public was Amazon. And I have to mention, I lived in New York at the time, and I remember that this was probably in early 2000 when Forbes ran an article that got quite a lot of attention, where they were arguing over 5 or 6 pages in Forbes why Amazon was going to go bust. And so it was really, for people at the time, it was very difficult to discern which one was going to be the winner. And a lot of the arguments that were presented against Amazon's potential success were sort of absolutely sound corporate finance arguments, but obviously they turned out to be absolutely wrong. And given that Amazon had raised financing and obviously was run by one of the most outstanding business leaders over the last 100 years, perhaps in history, they basically managed to grow throughout that subsequent dot-com crash and then built one of the most valuable businesses in the world.
Yeah, there seems to have been an article on Amazon like that. Maybe every year. Still, people are like, okay, now it seems like people are accepting that they're here to stay. But it seems like there's been a lot of analysts and people with like kind of a personal vendetta also against Amazon and trying to motivate that they won't survive and they won't be here.
Absolutely, and I think that I'm a huge admirer of Jeff Bezos and what he has done. And the fact of the matter is that even as a public company, for probably a good 20-year period, perhaps not quite 20 years, but at least 15 years, the business was constantly running at a loss, or perhaps break even, and perhaps a P&L loss, but free cash flow wise, break even. And he was just constantly, as soon as he got some more contribution, he was just investing it in new businesses. And going from a pure first party inventory taking book selling model to taking inventory of lots of different things to opening up a marketplace. And then obviously the biggest move, sort of at least for now, was going into cloud services and building up AWS, and sort of always delaying gratification. And what I mean with that is that, refrain from generating profits. And as soon as you get more contribution from your existing business, you plow it into the next growth opportunity. And first of all, you need to be, I think that there are a few things that for that to make sense, you have to have a really strong belief that what you're investing in is really going to become successful over time. You have to make sure that you get the funding to support the company during that time, and to basically make sure that you retain the confidence of your customers, of your employees, and ultimately your shareholders, that they're there to back you. And he actually showed the way how to build a really, really big company over time by sacrificing profits in the near term to build a much bigger business. And if you think about many of the businesses that have then subsequently emerged and perhaps are criticized today, and people say that the multiples are super high, or perhaps there aren't even any profit multiples because they're loss-making, they are following exactly the same playbook like Jeff Bezos. And we've been fortunate enough to invest in some of those companies. One that I would mention here is, for example, Meituan in China, the world's biggest food delivery business, that for a number of years, it was set up in 2010. Actually, I met the founder very soon thereafter. For probably 9 years, the business was loss-making. So you have to fund a business for 9 years. And by the way, it was loss-making to the tune of several $1 billion in 2015 and 2016. But he managed to find investors who were willing to back him. And then he ended up building, a business which today is worth $300 billion, and which is actually very profitable today, especially in its core food service business. But again, what then that allows you to do when you have a strong revenue generating business, profit generating business, contribution margin generating business, is that you invest in lots of other areas. And that's exactly what, for example, Amazon did, what Meituan then ended up doing 15 years later. And that's how you build big platform businesses over time. Now, just perhaps one thing to note is that obviously a lot of entrepreneurs have this vision, but it's, in my opinion, very much about execution. So you're not going to have hundreds of platform companies being formed and being successful. Obviously there's going to be a very, very strong and very dramatic sort of winning down of the best companies. So you will have thousands and thousands of entrepreneurs try to do this, but obviously then 10 years later or 15 years later or 20 years later, we always end up talking about the successful cases. So, the likelihood that you're going to be successful and, manage to build these huge companies is obviously not that high. And in our experience, what really makes an absolutely massive difference is sort of the founder and his team. So even though we invest at a late stage, sort of in the VC and private equity parlance, if you will, it's still very much sort of a bet on founders' ability to grow 5 times, 10 times, 100 times in some cases.
Yeah, this is kind of a good segue into actually a topic we wanted to discuss with you. There's a lot of discussion now about this winner takes all phenomenon, and you have the likes of Amazon, Google, Apple, Microsoft, and Facebook completely dominating their sectors. And there's now a lot of talk about regulation, and there's a lot of talk that, can this last? And there's different arguments. There's arguments for that they will last is the very phenomenon you described with network effects and kind of building something so big with and having the ability to basically be unprofitable for a long time while taking market share, which then creates this kind of quite a big barrier of entry for many companies, because they would need to also sustain similar losses over a long period of time, or alternatively come up with something that's way better than Amazon or Apple or whatever. So how do you view this scenario? Because if you look historically, most companies that have been big or have been market leaders have disappeared over time for whatever reason. Do you think this time is different? Will we still have Amazon, Google, Apple in 10 years, and will they just be bigger, or is there something on the horizon that will shake this up?
So I think that the big platform companies today will definitely be there 10 years from now, and they will be bigger, no doubt about it. But I also think that I think that there's never been a more interesting time in the history of the world to be an entrepreneur. There are so many foundational technologies that you can basically build your business idea on. There are billions of connected users and willing consumers to go after. And I would say that especially in sort of many of the key regions in the world, from the US to China to Europe as well, you have a thriving and very deep ecosystem for funding and obviously for talent. So I think that the opportunity for budding entrepreneurs, targeting the digital economy has never been more attractive in my view. Now, that's easy to say. Then to actually build those companies, it's still very difficult because obviously many entrepreneurs see these opportunities and they go after them. And for every good sort of potential business idea, you might have 100 entrepreneurs pursuing it, or several thousand entrepreneurs pursuing it. So obviously the competition is intense, but I have a great belief that new entrepreneurs will over time be successful in eating up market share from the big companies, and I think that's inevitable. So on one hand, I would say that the big companies today, they're absolutely going to be there in I would say that the vast majority of them are still going to be there in an even more powerful form 10 years from now. But I think that the opportunity set to go into other segments, innovate sort of around the edge, to then go after bigger companies is absolutely there. And then if you look at many of the big companies, when you are huge, it's very difficult to be nimble and sort of go after new opportunities. So if you think about some of the really big companies that have been built and have really emerged over the last 5 years, and I'm sort of, perhaps they were founded 10 years ago, but have really sort of emerged over the last 5 years. And I would sort of highlight companies like Uber. I would highlight companies like Uber in ride hailing, DoorDash DoorDash in food delivery in the US, Meituan in food delivery in China. What else could I mention? Kuaishou, that just recently went to the stock exchange in Hong Kong and is now a $150 billion US dollar company in short video. ByteDance, of course, through Douyin in China and TikTok in outside of China. These are all opportunities that Google or Facebook or Tencent or Alibaba could have pursued, but and they could have created their own businesses which would have been worth hundreds of billions, but they didn't do it. And there are many reasons for this, but I think that fundamentally, when it's a big corporation, it's difficult to really continue to be super innovating and taking risks. And then I think another thing which probably holds back some of the big companies is also market expectations about revenue growth, market expectations, especially around profitability. If you don't feel that, if you don't feel that you have to generate $10 billion of net income next year, because that's what the market is expecting. If you have the freedom to basically just investing $10 billion instead in new initiatives, which is obviously the conclusion that Jeff Bezos came to year in, year out, you may lose out on some of those opportunities. So I think the fact of the matter is that you will continue to have young, ambitious, smart founders that will go after interesting opportunities, and the technologies are there, the users are there, and I think that there's no doubt going to be massive competition, among these smaller companies, but also they're all going to go after the big companies over time. So I'm sort of saying a little bit of both. The big companies are going to get bigger, but I think that there's also going to be a lot of startups that are going to be massively successful. And actually, if you look at, if you put me on the spot, and we've done some work sort of internally about this, if you have around 7.5 trillion of internet sector market cap today, sort of in rough numbers, based on our expectations, and I don't think that they are too aggressive, and we've done it in a very sort of granular way. Our expectation is that there's probably going to be 25 trillion of market cap, 25 trillion of market cap, internet market cap, in 2030. And I think that that's, especially at 20 trillion, that's roughly a 3 times increase over 10 years. I think that should be achievable. Now, if you sort of think about that value increase, I would probably say that half of that, if not more, perhaps 2/3, is going to come from an increased value in already public companies, and then you're going to have sort of a smaller percentage being generated from companies that are going to be founded, and that's sort of pretty natural. But I think that the opportunity is really, really big, and the market, I expect, will continue to surprise us on the upside again in the longer term.
If I may, you offered it, so I will put you on the spot a little bit and ask you. You mentioned the older, the sort of the bigger companies like Google and such, and sort of maybe looking in the long term and what the challenges are in the long term for them business wise. How do you see the implications of their growth in terms of the obstacles that might come later? I mean, in one sense, I don't know if you implied this, but in one sense, it can seem like these companies are already a fundamental part of the, as it were, internet infrastructure in a sense, and people are already. I mean, I remember during it was last year or earlier this year, there was talk about in the US mainly that should these be considered public utilities like the telephone lines back in the days were legislated. How do you see, just in general, these sort of obstacles that might come later as these companies grow and cement their status as fundamental integral parts of what this entire technological internet ecosystem is built upon?
Yeah, you know what, I think that you're absolutely right. I think that there are going to be sort of significant challenges for them, especially from a regulatory perspective. And you see it in all parts of the world. Calls for some of them to, at least in some parts of their businesses, be treated as public utilities. In the US, there's been calls for breakups of some of these companies. In Europe, given that unfortunately there are very few homegrown real giants, there's been more talk about taxing the big US companies for the revenues and the profits that they generate in different countries. And then also in China, especially in the last year, I think that there's been some very significant moves by the Chinese government to rein in what they think is sort of unfair competition, taking unfair advantage of market dominance. And for example, and obviously all of this is very public, insisting on Ant Financial being much more strongly capitalized. So I do think that this sort of regulatory pressure will only intensify going forward. And I think that you're right. I think that will, to a certain degree, cap the potential of the big companies, and it will make it on the margin easier for startups to perhaps go after different opportunities, as these really sort of big platform companies are going to be limited in some ways in terms of their sort of degrees of freedom to pursue different opportunities, and sort of lock in different opportunities and sort of try to lock up customers. I think that there's going to be absolutely massive pressure from governments and regulators to try to rein that in.
Let's continue the guessing game a little bit, since you're good at it, and it's always interesting, and it's always hard to get people to, guess. And we can all acknowledge that it's guesswork, and no one knows. But you're in a very unique position to think about these things. So we already talked about underestimating the long-term change, but overestimating the short-term ones. So what about looking as an investor or as an entrepreneur now? It's a very it's the best time in history, you said. So what are some specific sectors you are most excited about? There's a lot of talk now about different technologies, ranging from cryptocurrencies to and the underlying technology of blockchain, to gene editing and these kind of CRISPR technologies, or 3D printing, food tech, fintech. There's a lot of words out there, but which ones should you be serious about if you were to look at opportunities for this decade as an entrepreneur or as an investor?
Well, I don't want to sort of pick, I don't want to be sort of too detailed in my prognostication, because I know that will just turn out to be wrong. But I think that you did mention a number of big opportunities. I think that perhaps to take a step back, I think that there are some really important foundational technologies which are available for entrepreneurs, such as obviously 5G rollouts taking place globally now at different speeds in different countries. But I think that can be a real game changer, just like 4G was such a huge game changer in the last 5 to 8 years, and just like GPS was such a game changer, perhaps going back a little bit further. I think that 5G, given much reduced latency in the network, in the cellular network, much higher bandwidth, I think that is going to offer up all kinds of opportunities for entrepreneurs. I also think that AI, different forms of machine learning, you already see sort of the most successful ones being very, very focused. Most successful big companies, are really using AI in many ways to offer a better service from Amazon's recommendation engine to TikTok's serving of new videos, which get you hooked. And all of this is basically using machine learning and AI to different degrees to offer a better service. And I think that some of these technologies, are important and will just continue to be even more important. And it's the entrepreneurs that can harness these foundational technologies to then sort of offer a better experience in various subsegments. But you mentioned a few. I think blockchain is going to have different blockchain technologies is going to have a massive impact on financial services. I think that 3D printing could have it on manufacturing. I'm absolutely no expert, but I think that it stands to reason that over time that's going to have a big impact. I think that electric vehicles, autonomous driving, gene editing, I think that they're already established in many ways and they will continue to grow. And then, I think that over time, and people have been talking about this as the holy grail for more than 20 years, quantum computing. I think that if you can actually build, sort of real working quantum computer, and obviously an enormous amount of resources are being invested here, I think that can also have sort of a huge impact over time. So I don't want to sort of limit sort of myself in my thinking, and I don't think that entrepreneurs should be sort of limiting themselves. So I think that there are lots of different opportunities, and then there are many known unknowns. There are many unknown unknowns. So who knows how the world is going to what is really going to sort of have the biggest impact. But in my experience, the impact of technology has sort of continued to surprise on the upside, and I don't think that we're going to sort of see a leveling off of that.
Now, I'd like to pivot, if okay, John. Can you take us to Asia, or China, maybe more specifically? Considering how big this sort of global shift in whatever dynamics you want to talk about, it's almost remarkable still how meager the public intuition about it is. So I'd like to, if it's okay, take us to 2010 when you moved to China for the first time to work for GSD Global. What was the scene, as it were, like back then, and how has it developed during these years? What have you experienced?
Well, I would say that if you say that it's not well understood, I think that you must be talking about it from the perspective of a European observer, because
yes,
if you are in China and if you are in Asia, I think that it's very obvious how the daily life of individuals have changed massively as a result of technology in the last years. And obviously, if you look at and many of these Asian countries, they're very, very different. China has a 14 trillion economy. Nominal GDP per capita is $10,000. By the way, in tier one cities, it's probably $25,000. So not far from many places in Western Europe. India is still much smaller. The economy is probably 1/5 the size of China, although the number of people is probably the same. So GDP per capita is obviously then sort of 1/5 as well, $2,000. Indonesia somewhere in between at $4,000. So there are just very, very big differences between these different countries. But I think that there are a few common themes which are the same. One is ever increasing urbanization. And it really is that urbanization that in many respects fuel a consumption upgrade as people move from rural to cities. They need housing, they need transportation. They're going to be contributing as employees in different businesses. They will start spending in a different way. So urbanization leads to massive consumption upgrade. And if there's one theme that has been sort of really at the core of the Chinese economy over the last few years is sort of this massive consumption upgrade. Then, of course, throughout India and China, you had this massive rollout of 4G networks over the last several years. Now you're moving into 5G, especially in China. Massive increase in smartphone penetration, which enables all kinds of services. So, the digital economy is actually, in my opinion, much more important in China in particular, but also in India than it is perhaps in Europe and US from a relative perspective. And e-commerce penetration in China is already 30%. So that's so 30% of all products are actually sold online, and I don't think that sort of increase is going to stop anytime soon. So it's an absolutely enormous digital economy that has emerged in China, and I think that it will continue to grow very significantly. And then perhaps a few words on just the tech ecosystem. Again, it's very, very deep. It's very robust, with financing being available at different levels, from pre-seed all the way to pre-IPO, and then very clear sort of path to IPOs, either in the US or Hong Kong, and perhaps to a slightly lesser degree on a shore in Shanghai for the moment. But I'm a huge believer that in the next 50 years, you will see across the world, regardless whether it's Latin America, China, India, Africa, Southeast Asia. I think that I have a very positive view about the development. Now, I think that there are obviously massive amount of challenges as well. Political challenges, income differentials, differences in education, etc. But I think that overall, all the people in emerging markets, the consumers, they want to have the same life as people in the most advanced economies in the world. And I think that human ingenuity, human initiative, ambition, and sort of the desire to create a better life for yourself and your children is very, very strong. So I think that we're going to see continued growth in the next 50 years, and many of the emerging markets catching up with the developed world.
Yeah, if you already look at the predictions on GDP growth and what the biggest economies are going to be in 10 years, you can already see that trend taking place with China being the biggest, and also India predicted to, in some instances or some predictions, also to overtake the US within the next 10 years. And you have Indonesia and Turkey and these kinds of economies just booming, hopefully, within the next 10 years. So is this something also, we're sitting in Helsinki, Copenhagen, so is this something as a Western entrepreneur you should also understand and take into account that maybe Europe isn't the only place anymore, or maybe the US isn't the obvious and first choice for exporting or entering a new market? You should also start looking east.
Well, I think that many of the most successful entrepreneurs in Europe have already done it for many years. And I'll just mention a few examples. Spotify, obviously, right from the beginning, was really focused on the global opportunity, going back 12, 13 years. Klarna has made great strides to very early on expanding outside of Sweden. Deliveroo, for example, which is now going public in Europe, in London, has businesses in a number of cities. That's more a business which is focused on particular cities than countries, but they have a presence in Hong Kong, they have a presence in Dubai, etc. And of course, Volt in Finland, they have Finland is a pretty small percentage of their revenues, and they have very successfully been able to expand outside of Finland, outside of the Nordic region, into Eastern Europe, into Israel, and now they're targeting Japan as well. So I think that the opportunities is absolutely there for European entrepreneurs as well.
Do you ever see this? Is I think we're going far now, but do you ever see the global dynamics changing? Right now we have Google, Amazon, Facebook, Apple, etc. Do you ever see these as being Chinese companies, and what would have to happen, and what are the implications? I hope that's not too many questions in one.
Well, I think that that's probably one of the most difficult answers, or sort of questions to answer, because geopolitics is very, very difficult to predict. And who would have predicted, the geopolitical tensions that we've seen over the last few years, even back in 2015. So I think that there will continue to be tensions. Entrepreneurs, on the other hand, the most ambitious entrepreneurs, they will always try to build global businesses. But I do think I think that you're right. I think that geopolitical tensions, various restrictions may well hold them back. And I think that unfortunately, I think that we've sort of seen these walls go up between different parts of the world in the last few years. But I think that it's very difficult to predict how that will evolve.
Maybe before we round off, can't have a discussion in 2021 without a mention of the coronavirus, and maybe from your perspective with technology or tech companies and overall just international business, how do you see coronavirus? Is it kind of a decade definer already? Is it something that's going to change the way companies do business, the way we work, or is it too early to call yet?
Well, I think that it has already caused a massive impact in the last 12 months. And obviously a lot of consumption activities, how people spend their time has moved online one way or the other. We have done some research. We estimate that the growth rate of consumer spend going from offline to online has probably accelerated by 5 to 10 times in the last 12 months. So that's the growth rate increasing. That's probably not, obviously it's not going to sustain, but I think that it has basically moved online spending to a new level, and it's not going to go down from there. It's going to grow from there, but you've just had this massive move that would probably have taken a couple of years happen in a 12-month period. You also see sort of time spent online, through your smartphone or through other devices. That has also increased, in our estimation, by at least 15%, which is actually very significant. Probably 45 to 55 minutes per day on average. So I think that we've seen huge changes in behavior, and I don't think that we're going to go back to the old world. Now, I think that to say that it's a decade definer, I think that that's perhaps a little bit more difficult. If you go back to the financial crisis, in some ways you could say that it ended up becoming sort of perhaps a decade definer because of a lot of actions and phenomena that happened sort of as a result of it indirectly. But I think that COVID is obviously having an absolutely massive impact on the daily life of different people. I think a much more significant impact on the daily life of billions and billions of people than the financial crisis. I actually think that if you think about something that has impacted people's daily life globally in such a massive way, I think you have to go back to to the Second World War to really have a phenomenon that sort of impacts so many people at the same time. So when that happens, of course, it has a number of implications. So I do think that it will, and of course, it's going to stay in everyone who's sort of been living through this. I think that this is going to stay in our common memory for decades, and people will sort of look back and reflect about what sort of changed then. So I do think that to sort of answer your question, I do think that it has had a very, very significant impact, and I think that many of those changes will stay with us for a long time.
How do you see this projection that many mainstream media read it on, and then there's a lot of Nicholas Christakis talked about this, that there, after a few years after this crisis hopefully is over, that there would be a new quote-unquote roaring 20s, as it were. How do you see this theory? I've seen Time and Newsweek have been milking this headline for a long time.
Yeah, I think to be honest, that who knows, who knows, but I think that there's definitely arguments, very sound arguments that you could put forward that when people can travel, when people can spend freely, I think that there's definitely going to be there's that will see massive massive activity. And of course, if you just sort of think about things like leisure travel, restaurant business, lodging business, they're an absolutely horrible 12 months, and I think that this will still continue for some time, that they could sort of see a resumption of very sort of strong or return, I should say, to sort of strong activity. So I'm not sure if it's if I would use the word roaring 20s, but I do think that people have been staying at home in many parts of the world for the last 12 months. They haven't bought a new apartment. They haven't bought a new car. A lot of capital investment decisions have been postponed because of uncertainty and because of difficulty of just sort of doing different things. So I think that there is certainly unpent demand that we will see basically being released going forward.
Maybe as a rounding off question, will be interesting to get your take. I recently did, together with Aalto-yliopisto, there's going to be a shameless plug here, so ignore it if you're against plugs. But we did a short podcast series on the platform economy, and that kind of opened my eyes to what that actually means. Because when I used to think about platform economy being, Uber or Airbnb, and that's about it. And then I realized through that podcast series that basically everything is a platform, if you think about it. So you have the internet being maybe the mother of all platforms, and then you have the smartphone layer that enables even more people to then add to the network effect, and that then brings more services and more platforms and sub-platforms and all that kind of stuff. So it would be really interesting, since many of the businesses you invest in are these kinds of platform businesses and also rely on the mother platform, internet or the smartphones. So do you kind of make a distinction here between the internet and platforms, or how do you kind of view this phenomenon? And is it something that's going to just continue growing and defining the way we do business?
Well, I would say a few things. I think that when an entrepreneur starts, you typically have to be pretty focused on one opportunity. But as you grow, obviously, many of these entrepreneurs realize that if you can get customers to come back more frequently, do more things on your platform, offer them new services, that's an interesting business proposition. So I think that many entrepreneurs absolutely have this platform thinking because it makes such obvious business sense. So, regardless of the company, internet company and many other companies, I think if they have an opportunity to expand their business and become more frequently used as a platform, I think that that's obviously what you would like to pursue. But I think that this platform thinking, I think that it's been most prevalent in different internet services, basically software-driven platforms that you can get consumers to come back. And then, perhaps on the hardware side, that's absolutely, for example, what Apple has been pursuing as well. They've tried to make it in many ways as close to platform as possible, so that when people switch their smartphone or switch or change a laptop or iPad, it's just so much easier to use all of the services and everything on a new Apple phone instead of going to Android, for example. So I think that many companies try to pursue this platform strategy just because it makes a lot of sense for them. So I think that you will continue to see this. Now, some of these companies are going to be more successful and more adept in pursuing these platform strategies than other. And if you go back and sort of look at a lot of initiatives of the big tech companies, a lot of them 10 years ago were trying to launch all kinds of social networking initiatives. Vast majority of them failed. So it's very easy to say that you're going to pursue a platform strategy. It's actually very difficult to execute at scale over a longer period of time. But I have no doubt that many entrepreneurs will continue to try to do it. It just makes a lot of sense from the business perspective.
Great. Thank you so much for your time and your insights. It's been a pleasure to talk to you again.
Thank you so much.
Great. Thank you very much, guys. Take care.
And
bye-bye.
Thanks
Take
to
care.
all listeners and viewers. Stay tuned for the next episode and leave a comment on who do you think will be the biggest company in 2030. Bye-bye.